Good evening, everyone. We'll start with the webinar for today, and we will learn basics of commodities in this particular session. The theme of this webinar would purely Good evening, everyone. We will start with the commodity basics today. And in this session, we will talk about the basics of commodities, what all things are required in order to understand commodities right from the base level, and then we'll take it forward by understanding the nuances of what are the nitty-gritties of commodities market. Okay, the main theme of this webinar would be purely on four grounds. Mainly, what are the fundamental factors that drive commodity prices? The second, commodities that are available for traders and investors to make profit and generate good returns. Besides, it is also important to know what are the important economic data releases that comes from country that drives the commodity prices. And next, what is in store for gold and silver, and for that matter, all other commodities for most of 2017. For those who don't know what are the exchanges that are available for traders and investors to trade in commodities is one is MCX, that is multi commodity exchange, which purely drives all the non-agro commodities, purely precious metals, which is gold, silver, base metals, which is lead, zinc, copper, aluminum, nickel, energy sector, which is crude oil and natural gas. NCDEX is National Commodities and Derivative Exchange. This exchange primarily drive agriculture commodities, especially guar complex, soybean, soya oil, CPO, mustard, are the commodities that are traded on National Commodities and Derivatives Exchange. Okay, just to give you a bifurcation for all the starters, what are the commodities that are available for trading? It can be classified into four sectors as such. The first sector is the precious metal, second is base metals, third is energy, fourth is agri commodities. Precious metals as such, many would be aware, gold and silver. These are the prime focus of markets across the globe, and hence it is available on multi-commodity exchange. Besides, base metal is also one of the widely traded commodities across the globe, and it is followed in domestic exchanges as well. Copper, zinc, lead, nickel, aluminum are five basic prime commodities for base metals. Similarly, it goes for crude oil and natural gas, and other agri commodities like wheat, soybean, jeera, turmeric as such. For investors, it is very important to know what are the basics when it comes to trading commodities. Hence, while giving an example, if you need to trade in commodities, commodities can be traded in lots. It is like minimum quantity that needs to be purchased or sold. Example, as such, if you trade in equities, you buy 50 shares, you give cash. Similarly, in that sense, this is futures trade wherein tradable quantity has to be bought in terms of lot. As an example, if you need to buy gold, you can quote as one lot, two lot, or three lot. The margin system, since this is futures, this is highly leveraged, highly volatile. There is some minimum amount that needs to be invested for buying and selling of this particular commodity contract, and hence there is something called as margin system, which means the minimum amount has to be kept by an investor if you need to take positions in certain commodity. The next thing that you have to understand is mark to mark difference. Mark to mark difference is nothing but the daily difference or buy or sell price with regards to current market price or the close price of the day. As an example, if you have traded in gold at around 29,000 mark, and if the price goes below 29,000, you're out of the money, and the difference has to be marked to market by the exchange. So that is what is called as mark to market. And since this is futures as an asset class, this commodity has multiple expiry dates, and these are called as contracts. As an example, at one point in time, you have four different contracts available to trade. For instance, if it is a commodity like crude, the current month running contract is March contract. The next month would be April, May, and accordingly June. So these are four calendars per month contracts which are available in terms of crude. and it goes on similar for all the commodities. These are some product specifications while trading. What I really mean by product specification is how much 1 rupee movement would give you if you are invested in gold, or for that matter silver, copper, or crude. Example, copper, the size of the contract is 1 ton, and every 1 rupee in copper would give you 1,000 rupees on either side. So in that case, if you take positions in copper, every 1 rupee movement will give you 1,000 rupees. Similarly, there are options like copper mini, which is available for trade. This is a smaller contract when compared to the bigger one, that is 1 ton. So every 1 rupee movement in this particular mini contract would give you 250 rupees. As an example, you take crude, 1 rupee movement in crude would give you 100 rupees. The total size of the contract is 100 barrel, and hence 1 rupee move is equal to 100. Similarly, you can go for gold and silver as well. Gold has a bigger contract with the lot size 1 kg. So every 1 rupee tick in gold gives you 100. There are also many options available in gold. It's 100 gram, where every 1 rupee movement in this particular contract gives you 10 rupees on the other side. So these are some product specifications where one actually needs to understand before trading or investing in these commodities. Okay, what since commodity as such is not understood by all, it is important to know what are the benefits that commodities gives as an investor, as a trader. Since commodity markets are traded across the globe, it is transparent and it is a fair price that you can see on your screens. And everything is standardized. It is based on lot system. It is the contract specifications are actually made by exchange depending on benchmarking the international contracts. And the biggest benefit, it is easy to understand in some sense if you understand the basics of commodities. It is linked to global markets and it is a 14-hour market, and you can easily have access to wide arena of information when it comes to commodities. And hence, benefits of commodities trading would give you better returns if you understand what are the nuances of trading in commodities. Commodities, yes, as an asset class, this commodity will give you good trading opportunities. If you are trading intraday, it purely depends on your risk appetite. But if you are taking as an investment, it really depends on which commodities you are trading in. And because it is risky and volatile, you can also do your calendar spreads depending on your risk profile. The best thing about commodities is you need to pay 5% of the entire contract while trading in commodities. The second best thing for while trading in commodities is the 14-hour market. In India, it starts at around 10 a.m. in the morning and it ends up at around 11:30, 11:50 in the night. Okay, what we also need to understand is what are the major drivers of all the prices that you see, and what are the and for sector specific things you need to understand some basic factors that drive commodity prices. As such, major fundamentals that drive major commodities, it totally depends on the demand supply situation of a particular commodity and whether there is geopolitical tensions that is happening across the globe or not. When it comes to specific commodity like precious metals, specifically gold and silver, there are 3 to 4 major factors that drive prices of the commodities. The first of labor market in the US. It clearly defines the employment scenario in the US, and if it goes good, it is good for the dollar, and the inverse relation holds true for precious metals. The housing sector also plays an important role when it comes to gold and silver, and hence recovery in the housing sector plays an important role for driving gold prices upside or downside, depending on how US. When it comes to crude oil, the 3 4 basic things are you should know who are the major producers in terms of oil production and who are the major consumers. If you know basic producers and basic consumers, you can gauge the basic trend of oil prices. Besides, it is also important to know what is OPEC doing with regards to its production quotas, and that one needs to know is crude inventories in the US. These 3 to 4 basic things will do a long way in deriving whether the crude oil as a commodity is headed upside or downside. As far as base metals is concerned, me is one thing which needs to be closely tracked for. Hence, any data from China economy, whether it be GDP, whether it be PMI number, it has to be closely watched for. And since supply demand dynamics holds good for base metals as well. Economic indicators is a key for commodity prices, and hence economic indicators coming from US, Euro, Pound, Yen has to be closely watched for. When it specifically comes to US, two three major data sets drive global commodity prices. The first would be the unemployment data, which has to be carefully watched for. The second would be consumer confidence relevance when it comes to US economic calendar. Similarly, if it goes for India, which is rupee, the RBI policy has to be closely watched for any movement in rupee. Besides the inflation data coming from India, the IIP data has to be closely watched for regards to Indian economy. Okay, these are our offerings when it comes to Angel Commodities Research. We have our daily, weekly, and monthly reports that are released from our desk. Besides, we also have special reports which gives you regards to every commodities depending on the reports released by the government. Besides, we also have monsoon report, sowing progress report that gives you a good sense of how is the agriculture functioning in Indian economy. On the international front, we have ECB update which talks about of European economy. We also have FOMC update which talks about what is happening in US economy. Similarly, we have event specific reports like Diwali Bullion Report which gives you a hint on the demand side of gold, and hence Diwali Bullion Report holds a lot of importance when it comes to gold. On the technical side, we also have daily, weekly, and monthly reports released from us. The daily report holds a lot of significance if you are in intraday trader. Hence, daily technical reports has to be carefully looked for. These reports can be found on our site commodities.com, www.angelcommodities.com, where you can find all these reports in one single page. Thank you very much.